Welcome back. We have been speaking with SBI Chairman Arundhati Bhattacharya, Srinivasan Varadarajan, Deputy Managing Director of Axis Bank, Amandeep Chopra, the Chief Investment Officer at UTI Mutual Fund. Now let's get a stock market perspective as well. Vikas Khemani, President and CEO, Edelweiss Securities, has joined us. Vikas, good morning. Thank you very much for joining us. The bank arithmetic is very clear. They have 3.25 lakh crore taken at largely 6%, I would think, because before November 8th, people were giving largely in FDs and maybe some of it in savings deposits. So an average cost of 6% is now going to earn 0. How are you going to approach bank stocks on Monday morning? How will the market approach?
Obviously, I think there would be a negative reaction to this. One is the financial loss, and I think secondly, I think there would be somewhat bit of chaos in the bond market. Bond rate will go up, so I think both impacts will definitely will be negative for banking stocks. And to that extent, you might see some corrections. If you see in the recent past stocks, when markets corrected, banking stocks were kind of holding on for the simple reason markets were giving positive benefit that because of this collections, the CASA is going up and hence the income might go up. So to that extent, that benefit goes away. And till the time this continues, I understand this is a temporary measure, but till the time this continues, and I think and whatever new measures come from RBI to whether it is temporary, how long it will continue, one doesn't know. So I think the market will remain a bit uncertain, and I would assume that banking stocks would correct in this week.
Okay, actually, PSU banks did extremely well from November 8th onwards. So in terms of classification of which side is more vulnerable, any numbers, and there are also NBFCs. So of all these three sectors, private, public and NBFCs, where do you think the blow might fall a little sharper?
So I think PSU banks were fairly large recipient of this move, undoubtedly, and followed by some of the large private sector banks, likes of ICICI Bank, SBFC. So I think banks which were kind of large and was recipient of this move, and where you can only say 5, 7, I mean probably 8, 9 large banks were between private sector and public sector. Public sector obviously leading. So, would have that impact. I don't think NBFC would have any significant impact because of this particular move. Give or take, I think, impact of interest rates short term, but that would, I think, would be meaningless. But I guess it is banks in order of public sector and then private sector.
Which will take the blow. Okay, Vikas, stay on with us. We have to take a quick break, but we are coming back with more. The key takeaways from our experts so far is one, that yes, there is going to be a P&L hit for banks depending on how much they collected in savings and time deposits. Two, will be uncertainty in the bond market in terms of what is the Reserve Bank's next move. And so an immediate sell-off is possible, but our experts think that yields should not rise more than 10 basis points because there is still more money that's looking for a home, and therefore bonds will be bought at lower levels. And our stock market experts say that bank stocks, first PSU banks and then private sector banks, are likely to take a hit on Monday itself, and then of course the market will look for more policy directions from the Reserve Bank. We are coming back with more, a short break, and more experts join us.